Hi everyone, good afternoon. Thank you so much for watching this video. As you know, my name is Leland here at Keller Realty, and I wanted to make a video to talk about several things here in this video. Number one, I want to look at the stock market's reaction to previous viruses in the past. Number two, I want to look at what housing prices have done in relation to previous stock market corrections or fear in the marketplace. And then number three, I want to review what a recession is and what home prices did during the last 5 recessions. And then really, what does this all mean to you and how to proceed forward? So first off, here's a chart that shows you what the stock market's reaction was to previous viruses. As of right now, we don't know how the coronavirus compares to these because we're still going through this. However, the market did come back after each of these viruses. Okay, next, let's go ahead and look at how the housing market has previously been affected by stock market corrections or fear in the marketplace. So in this segment of the video, I want to look at 3 things. Number one, what happened to home appreciation during the 2008 financial crisis? Number two, what happened to home appreciation during the dot-com crash and the 9/11 crisis? And then number 3, I want to review some data points as well as look at what some economists are saying and see why this is most likely not like the 2008 financial crisis. So here's a chart that shows you what happened to the S&P 500 during the 2008 recession. You can see that the S&P went down to a negative 51%, and actually annual home price depreciation depreciated a total of 18.7% from 2007 to 2009 nationally. Now this next slide we're going to look at, this was during the dot-com crash and the 9/11 crisis. You can see that the S&P 500 correction actually went down negative 45%, yet home prices appreciated 23.7% from 2000 to 2002. So 9/11 has a lot in common with what is happening today. You know, people are avoiding crowds. The same part of the economy is actually under pressure, right? Again, you can see that during the dot-com scare and after the 9/11 terrorism attacks, the stock market showed volatility just like we're seeing today, right? And however, you know, the housing market wasn't affected and home prices actually ended up appreciating during that time. Here's what one economist is saying. I'll leave this up on the screen. What 9/11 has in common is what is happening today is that this shock has also generated fear, angst, and anxiety among the general public. People avoided crowds then, and they believed another terrorist attack was coming and are acting the same today to avoid getting sick. The same parts of the economy are under pressure: airlines, leisure, hospitality, and restaurants, entertainment, consumer discretionary services in general. And now I want to look at, why a recession does not always equal a housing crisis. So the definition of a recession is a temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters, right? So now this is going to be a chart that shows you what actually happened to home prices over the last 5 recessions. So you can see that many people fear the stock market volatility from the pandemic that's going to cause another recession. Whether or not that happens, it's important to remember one very important thing. A recession does not equal a housing crisis or a crash like we saw in 2008. A recession doesn't even mean that home prices will depreciate. If you look at the above graph, you'll see that in the 5 most recent recessions, only 2 of them saw values decline. While we may or may not know what the future holds, if you are pausing on buying or selling a home because you think a recession will cause another housing crisis, they're not the same thing, and you could be missing out on today's record low mortgage rates if you were considering purchasing a house or upsizing, moving, things like that. We're going to touch more on that later. So for now, I just wanted to show this chart to show you guys really what happened to home prices over the last 5 recent recessions. Here's a quote from Bill McBride with Calculated Risk. He says that with the sudden economic stop and with many states shutting down by closing down schools, bars, and restaurants, my view is the U.S. economy is now in a recession, started in March 2020. and GDP will decline sharply in Q2 as Goldman Sachs is forecasting. The length of the recession will depend on the course of the pandemic. So here is the forecasted GDP by Goldman Sachs, and you can see they are expecting it to go down to -5% in Q2, and then recovering here into Q3 and Q4, and quote, with further strong gains in early 2021. Here's a quote from Wells Fargo Investment Institute, and it says, we do not expect a repeat of the severe recession of 2008 to 2009 because the virus and oil shocks are not endemic to the financial system, but are rather external. Once the virus infection rate peaks, we expect a recovery to gain momentum into the final quarter of the year and especially into 2021. So basically what Wells Fargo is saying is that this crisis is very similar to the 9/11 crisis as well as the dot-com crash. It was an external factor, whereas with the 2008 recession, that was a direct financial crisis right in the middle of housing, right? So now I'm going to put up a slide that shows you total home equity cashed out prior to the recession and then also prior to the last several years. So this is a great graph showing why this is not 2008. Before the 2008 housing crash, many homeowners were withdrawing equity from their houses. This cashing out led to many negative equity situations where the amount of the mortgage was greater than the value of the home, right? And many foreclosures and short sales followed, thus lowering the values of all the homes in the area. But homeowners have fortunately learned their lesson. You can see that there's actually $500 billion more in equity in American homes today than there was in 2007. So what does this mean for you? It means that more than likely home values will not depreciate as a result of a recession this time. So here's the bottom line to wrap this all up, right? What does this all mean to you? So recessions are a normal part of markets, and 3 out of the last 5 home prices actually appreciated, right? Right now, we truly still have the lowest interest rates that we've have had historically, right? I think right now they're around 3.75%, really low interest rates. Many experts believe that this won't be a housing crisis due to the fact that many mortgages are not subprime loans and the fact that Americans learned their lesson and have not tapped their equity in their homes, leaving over $500 billion in equity in their properties as a nation. Also, money is cheap to borrow and we're still in a housing shortage. So what does this all mean to you? Number one, if you have lost your job or you are concerned about losing your job, then absolutely it does not make sense to buy. Number two, if you are confident in your job and you're not going to be losing your job and you've been renting, then 100% it makes sense to buy a home based on the low interest rates. So if you could find a reasonable payment and a reasonable home, then absolutely it makes sense to buy and not throw away tens of thousands and hundreds of thousands of dollars over the next several years to rent. Also, if you're thinking about downsizing or upsizing, getting a bigger home or moving down from one, then absolutely right now it makes sense to do that due to the high demand and then also due to the low interest rate that you're able to get when you transition into that next property. So bottom line, I hope this was helpful. I just wanted to share some data and some graphs that I was looking at. And again, do with what you want with the information. But I just wanted to come out here with value and kind of help educate you and hopefully help bring some calm to everything that's happening. Yes, I'm super thankful. I thank God that our government is intending to work through this, all the governing authorities all over across the nation. And also, I just wanted to jump out here and share with you what happened during the stock market, last corrections, and housing prices. So if you guys are ready to buy a home, sell a home, or invest in property, and it makes sense for you, then absolutely reach out to me. Or if you need help planning your long-term housing plan, then absolutely you can reach out to me, ask any questions, and we can help you with that, whatever that looks like. So thanks so much. God bless you guys. Thanks for watching this, and share it if it was of value. Talk to you soon. Bye.